Hello and welcome to Pro Trader Strategies Market Commentary for Monday, October the 16th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on. No real economic data today. We do get some later on this week. We get crude oil inventories, we get some manufacturing numbers, Empire State Manufacturing, and some basically capacity utilization numbers, things of that nature. So later on in the week should pick up for the economic data, but it being a Monday, not a whole lot going on. And we do also have a couple of Fed governors speaking later on this week as well. So all of those things could cause the overall markets to get a little bit stirred up. But let's talk about the markets anyway. We've got crude oil up trading around $51.89, up about 44 cents, and right in line with where I thought it was going to travel to, which was where this value area high is. Remember, I've been talking about this low volume node. I'm thinking that the market is going to want to bounce between these two nodes here and kind of fill in some of that volume and time. So this support of the 28 or the 23 Fibonacci level, that should act as support now that we're back above that, kind of opened up above there and rallied right off the bat. We're giving up about a half back now, but for the most part looking pretty good for the bulls in crude oil. Gold futures topping out a little bit. They are in the 1300 area. As Friday they finished on their highs up above that level of 1300, now trading 1305, but it is looking like it could be getting a little bit toppy. It's back, or it's above this value area high. Anytime we start getting above that, market is going to want to kind of roll back over as people start covering their longs and things of that nature, but that is yet to be seen because we have this 50-day moving average lining up right in line with that value area high, so it will act as support for those bulls that are long that market, but we're going to have to wait to see if we get any confirmation on Tuesday whether or not we can trade down to the downside. I think it's a little overdone to the upside. Same with bonds. I think they're overdone to the upside. They're just in slightly negative territory by one tick today, but if you look at this big move we had on Friday and then this candle right here, it's looking a little toppy to me there as well, as most of the broader markets are as well. We've got the Dow Jones Industrial Average up 42 points and change. Market continuing to make new all-time highs, another intraday all-time high for the Dow Jones, as we have another intraday high for the NASDAQ. This was printed in the daytime, but you can see this doji is really starting to look kind of toppy to me. Of course, we're going to have to wait for confirmation on that. Would need to probably trade down to test that 6,000 what is that number right there, 6,070 area, let's call it. So 6,070, if we can get a trade down there, it's going to look more bearish on that happening tomorrow. E-mini S&P's unchanged on the day, but we're getting that whole wound up rubber band, and it's just whether or not it's going to pop to the upside or pop to the downside. My feeling is that it might want to pop to the downside, just because it could be a little overdone to the upside with some profit taking going on. We might see a bit of a small correction. I'm not saying like a 10% correction necessarily, but at least a bit of a correction here. Come back down maybe to the 2,500-ish area. So let's call it 2510. I think that will act as support when it comes down towards this volume node. All right, on to the 30-minute chart of the E-mini S&Ps. As you can see, this was an intraday high, happened right off the open. Market rallied up, ticked off that all-time high, and has since come off a little bit. It's looking a little bearish. We are very close to an inside day, but slightly outside that. Today's point of control lining up very nicely with Friday's point of control. Now on to markets that I've traded today. WYNN, ticker symbol WYNN. If you remember, I played this to the upside in this trade, and I had on the October, was long the 142 calls and then short the 146 calls. That's in October, so very close to expiration. Market came up and tested, really blew through my 62s. As you can see here, the high was quite a bit higher than that. I didn't wait for that high. I put it in to get 50% of my max profit on that. And I originally paid $1.98 for that trade. I got out for $3.05. So I'm out of the WYNN trade. 50% of my max profit is right there at $3, because remember, I paid $2. For all intents and purposes, it's a $4 wide spread. So max profit on that would have been $2 on that call spread, risk one to make one kind of thing. And then I take 50% of that. So getting out at $3, just slightly over that 50% of max profit on that one. So that trade worked out nicely. Costco is another trade that I've had on for a while, and I sold some puts in here. In my IRA, I did it as a short put spread. In my margin account, I did it just as a short puts, and I had on the November short the 145 puts in there. I originally sold those for right around 63, 64 cents, bought them back for 31 cents. So 50% of max profit in there worked out nicely. In my IRA, if you remember, I put on the November again and was short the 145 puts and then long the 130 puts. And I originally did that strategy to make it look like a synthetic short puts, naked short in a sense, made it really wide just to define that risk so that it didn't eat up a ton of margin in my IRA, because they have a tendency to take more margin out of your IRA for those trades. And so I defined that risk. It's not illegal to do naked puts in there, but it was strictly for a margin saving strategy in a sense. And originally sold the 145 130 put spread for 59 cents. Basically sold the 45 puts for around 61 cents and or 60 some odd cents, and paid 4 cents for the 130 puts. So what I did is I originally went in there and was getting out of it as a put spread, and then I kind of decided, hey, why am I getting out of my 130 puts for a penny? I might as well keep those on. I mean, in a sense, the short 145 puts paid for that strategy, and so I decided just to go ahead and leave those on just for the next 32 days and see if something happens. If there's a big correction, then I've got a nice little free protection or a free trade on, in a sense. So I just got out of the 145 puts, but because I stalled around and waited, I got out of those 145 puts better than I did in my margin account. So in Costco, I got out of the November, bought the 145 puts back for 29 cents. So still made 50% of my max profit on the overall spread, and I'm looking at it like I have those long 130 puts on for free. All right. So out of, for the most part, Costco from my trades, just got that free trade on with the 130 puts. But now on to Nike. Now with Nike, I added this strategy. It looks like it's kind of bottomed out. We've got these two dojis here, a little bit of confirmation to the upside. So this area acting as a nice support, the 50 handle. So went in there and did a long call spread, and I did the November 47.5 calls and 55 calls. Now, do I think it's going to get all the way up to those 55 calls? I don't think so, but I think we're going to at least go back and go to the point of control. So in that time, I think I might be able to get very close, if not all of my 50% of max profit on that, if I start getting that move happening relatively soon. So I paid for that $3.84 for the 47.5 55 call spread in both my IRA and in my margin account. So put both of those on in both of those trading accounts. All right, then finally we have XLK. This is the one that I only really had in my margin account, and it was a loser, to be quite honest. And I had on the October, I was short the 59 calls and long the 60 calls. So I had a short call spread on there, sold it for 32 cents and bought it back for 93 cents. So almost a full loser on that. Those were in the money, and because they're in October, I only have a couple of days to go in it. I don't really see it making that big of a move to the downside in the next couple of days. So I just sort of decided to pull the ripcord on it and just get out a little bit early. I actually put it in there thinking that it was going to take a little bit longer to get out of that. So I wanted to put it in a little bit early so I didn't have to worry about having any of that get called away, and then I'm basically short those. So just washed my hands of it and got out of that XLK. Friday's webinar, we're going to be doing a really good one. It is going to be a strategy you guys all know about, but at the end of the day, I'm going to show you how to set up the long call calendar. And as we're going through earnings, this is a great one right after an earnings for a particular underlying to go in and set this up for the long duration. And I'm going to show you how to set that strategy up to increase your probabilities of success and how to manage that, because with the long call calendar, you're using really long duration options. So check that out. Go to protraderstrategies.com, and if you can't take that, take it easy.